All right, what's up, everybody? Here with Alex Morris, who wrote this fantastic book that I can't recommend enough, Buffett and Munger Unscripted. And dude, you saved me a whole hell of a lot of time because the both of us listened to every single Berkshire annual meeting, from what I understand, 2 times. I took notes and I got the idea, thought maybe I'll write a book about it. And then I swear to God, like 2 weeks later, I heard you on, I think it was the Acquirers podcast. I was like, he took my idea. And I was like, oh, I'm glad he did. This sounds like it would have been a heck of a lot of work. So before we get into that, Alex, just tell us who you are and where you at right now.
Yeah, well, thanks for having me. If you had done that like 2 years earlier, you could have saved me a lot of time. So maybe if a revisionist history, you could have wrote the book, and I could have had a bunch of my life back. But it was a great experience writing it, obviously. And as you know, it's kind of a joy to go through that source material, right? Especially for barely even alive for the stuff in the early '90s, in my case, or not interested in investing. So it's just so amazing that they finally released those years, which I had kind of been clamoring for a long time. And it's, more than anything else, it's really just an honor to be able to write this book for two people that I've looked up to so much in terms of investing, but then obviously more broadly than that too. I'm glad I was able to do it. And I'm glad it's done as well. But yeah, for people who don't know me, my name is Alex Morris. I run TSOH Investment Research, which is, I basically view myself as like an outsourced equities analyst, basically. Before I launched this, I worked as a buy-side analyst for about 10 years at investment advisory businesses. So yeah, we can go into more detail about that, but that's kind of the 30-second pitch of who I am and what I do.
I get a lot of beginners listening, so real quick, jumps out buy side analyst. How would you describe that to a beginner?
Yeah, basically you think of an investment advisor and you have savings that you want them to help you invest, and they go through the process of, okay, what are your assets? What are your liabilities? And eventually you get to the point where you're setting an asset allocation. And as part of that asset allocation, you're eventually getting down to some sort of stock portfolio, which may be indexed or may be active. My focus was the active side of the portfolio, picking individual stocks. So that's the part of the game that I really love, which is a small sliver of what's actually involved in running an investment advisory business, which largely explains why I left to launch my own thing, because I want to kind of focus on the one piece of the game that I really enjoy most. But yeah, so that's kind of what the role was.
And you turn that into the science of hitting. So it's funny. I haven't read that book. It's on my list. Heard Warren talk about it in one of the annual meetings, and it's referenced to a Ted Williams book. So, are you a baseball fan? I'm guessing, right?
I am. I'm a Cleveland fan, which we're fighting back a little bit now, but we're in an interesting spot. We're not particularly good. We're not terrible either, though.
Ted Williams, he's a fantastic hitter. Warren talks about how he would just wait. He'd have this area in the strike zone, just wait for that perfect fat pitch to come. So, what do you do over there at the Science of Hitting, and where can people find that if they want to?
Yeah, people can find it at actually thescienceofhitting.com. But yeah, the output that I view myself as an outsourced equities analyst. What I do is I send research every Monday and every other Thursday. So call it 6 times a month. And those write-ups are either initiations on new companies that I'm becoming interested in. Sometimes they're updates on portfolio holdings or watch those companies. And then the third kind of big bucket is investment philosophy discussions. So things like holding cash, how I think about macro as part of the investment process, like stuff like that. And then the other kicker on top of all those things is 100% transparency in terms of any time I make a change in my portfolio, I disclose it to people beforehand, tell them exactly what I'm doing and why. And here's the portfolio, every name, all the weightings before and after the change. So again, like just full transparency. Here's my returns. As I look at the finance business and the investment advisory business, there's a lot of it that's not really about kind of the investment game, or at least how I perceive the investment game, right? In a lot of the conversations, I hint at this in the introduction of Buffett Munger Unscripted, where a lot of the conversations feel like a lot of people just talking for the sake of talking and not really saying things that are particularly relevant to the questions that truly matter on things like position sizing and security selection, et cetera. When I launched TSOH Investment Research, I had 10 years of having lived that life, and I knew kind of what I wanted to do and how I thought it could be differentiated from a lot of, what's typically considered normal in the finance and investment business. So it struck a chord with a certain type of subscriber. So that's been good.
Nice. So that's been growing. That's good to hear. Yeah. So I'm guessing that TSOH is influenced by obviously Buffett and Munger and what the Berkshire boys have accomplished and done. And yeah, when you hear transparency, I think of Warren, like one of the most, if not brutally transparent people, except for when people want to know what their, some of the particulars about what their position sizing is going to be. Obviously, he doesn't get into that. With that being said, when did you get the idea for writing the book, and tell us a little bit of how long this process took?
I mean, not to make this story too long, but I became interested in investing. I think it was my sophomore year of college. So call it 2007, 2008, somewhere in that range. And one of the first books that I really fell in love with after I stumbled upon Warren and Charlie in the first place, because I don't think I really even knew who they were up till that point, but I stumbled across who they were. And I eventually learned about Larry Cunningham's The Essays of Warren Buffett, which is a book that, for those who don't know, essentially takes the shareholder letters from the prior decades and breaks them down into different topics and different sections. And it's a book that is incredibly valuable to me in terms of kind of learning about investing and trying to become more knowledgeable about all these various parts of the game that obviously I basically knew nothing about at that point in time. So yeah, fast forward a decade. In 2018, when Berkshire announced that they were releasing the annual meetings back to 94, I mean, it clicked like immediately that, oh, there's an opportunity to do something like that for the meetings. I also knew it was going to be a lot of work. And as we were kind of joking about a bit there a minute ago, I didn't necessarily know that I wanted to be the one to do it. But after a little bit of time went by, I eventually linked up with Harriman House, got serious about the project, which I think that was around early 21, maybe some point in 2021. And as I told them at the time, if I was going to commit to the project and truly do it, which I had kind of been working on it, but mostly in terms of listening to the old material for my own learning, but then also kind of topics that I could use at TSOH for investment philosophy discussions, because obviously they talk about a lot of things that bring up, interesting things to think about and write about. But I was really using it in that regard. Then I linked up with Harriman House. I was like, I got to reach out to Berkshire to get, approval is not the word, but just not disapproval for doing this project. I don't want to publish it, and they're not okay with me having used their words, which the book, obviously, as you know, is almost entirely their words, right? So yeah, I wrote to them and got a response from Warren's assistant Debbie saying it was okay to go ahead. So at that point, I was like, oh crap, I have to do this now. I have to really do this now. I think from there, it was something like another 18 months until I turned in kind of a finished draft. And at which point I thought, like, thank God this is done. That was a lot of work. And for anybody who's ever written a book before, that is not where you're done working. That's like the halfway point, maybe. So I had a lot more work after that in terms of editing and other things. So, but yeah, finished up in early mid 24, and then it came out in January of 25. So it was all in. It was a couple year process.
Man, I had to have you on. I had to say thank you again. I mean, it's just I'm running out of ink. I'm going to go through a couple pens because every single page I am highlighting and underlining. And for anybody that I can't recommend enough, I'll have a link below, but you've got to buy this book. You open any page, you will learn something. It's guaranteed. You'll have a different way of thinking about things. Just today, I've been treating it almost like a daily devotional. So I'll just read 1 to 2 pages a day, highlight what stands out to me, and then just think about it. Think about how that can make me a better investor. And it's like today, I was just reading how Warren said that it strikes them as nuts paying 20 to 30% as a dividend just regularly, just without question, and not retaining those earnings, just a blind dividend. But once you start, it's hard to stop because people come to expect it, and companies can get into trouble. But thank you. I can't say it enough, because I've got the idea to listen, because I drive a lot. You guys know I'm in construction, so I'm always listening to the earbuds, and I listen to all the meetings, one just straight through. And then I thought I should start taking some notes. So I listened again. And every time I had my spreadsheet, I heard something they liked, I would just kind of put my interpretation of it in. And yeah, man, now I look at the finished product, I'm like, oh my God, this would have been a Herculean effort. You did it. So again, Alex, thank you so much for giving the world this. It's just fantastic.
I appreciate it. Thank you very much. And yeah, getting it to it's 500 pages or whatever. Getting it to 500, as you know, it was kind of a challenge, and that's great to hear as people go through the book. I mean, I'm biased, but I feel similarly as I go through and read the book. If I had my highlighter, I would be scribbling on every page. So yeah, it helps to write a book starting with really good source material, which Warren and Charlie talking about business and investing is about as good of source material as you can find out there. So yeah, again, like for me, I became interested in investing almost 20 years ago now, and I've been basically obsessed from the jump. And it means a lot to me to be able to kind of give something small back that hopefully could be a reference for people, just like Larry Cunningham's book was for me. It can be like that for a range of investors, people just starting out, or, one of my favorite things is when I talk to someone who goes, "Hey, I've been doing this for 40 years and this is one of the best investment books I've ever." It's so nice to be able to hit both of those ranges. It is funny, to your point, and it's one thing I always come back to, and it's always been true about Berkshire, but when you put the time in again to listen to Warren and Charlie talk about all these different topics like capital allocation, as you hinted on, dividend policy, the idea of having an investor relations department, all these things that they're just the way things are kind of generally done or typically done in corporate America at public companies. And when you read their words and you step back sometimes and think about it and go, wait a second, like this is a lot of this is useless or worse than useless. It's going against the actual desired long-term goal of what you should be doing here. And it just really opened your eyes to one, how unique they are, to what it requires to end up in a place where you have the flexibility to even act in a way that is so distinct and unique from others. It's just really notable to me. And you see it the more you look at companies that are quote unquote like normal in terms of how they approach these things. It really helps you to appreciate the ones that are rare, and they are rare. There's few of them.
Well, I'll go right into that. Speaking of rare companies, you got Berkshire. So, have you ever attended one of the annual meetings? Have you ever gotten to go to Omaha?
Yes, I have. I think I've gone like 9 or 10 times at this point.
Wow.
The first time I went was as I was saying before, I think it was '07 or '08 when I first became interested in this stuff. I went to the University of Florida in Gainesville. A buddy and I kind of both became simultaneously obsessed about this stuff. So we were like, we're going to go to the next Berkshire meeting. So I can't remember, maybe that was in May. It was either May of '08 or May of '09. We drove from Gainesville to Omaha, it's like 25 hours each way, and we were college kids with no money. So like I think we slept in the car 1 or 2 nights, maybe one night each way, and then my mom was nice enough to get us a hotel in Omaha. That was my first Berkshire experience, which was yeah, many moons ago now. But I went again this year. It's such a great, obviously I have the book now, but it's just such a great experience in terms of the people who go out there, like you were saying, acquire, Jake and Toby and those guys. And they're just, you see so many great people who, it's so nice to kind of connect with them in person and to the community that's really around Berkshire and around, the investment community or the value investor community. Basically, it's great.
Yeah, it's funny you say the connecting, because I've heard from people that have gone that it's almost like the meeting is not the highlight. The highlight is just all the people you see. Again, it's like, just that big community you get to connect with. And I'm planning on going to the next one, of course. The year I should have went, right, is when Warren stepped down. It's funny. I was watching it, and my wife was like, "How come you didn't go?" I didn't have a good answer. I was like, "I don't know. I'm in Chicago. I'm about 6 hours away from Omaha." And she's like, "You should have went." I'm like, "You're damn right. I should have went." And I literally said, "I'm going next year." And maybe like an hour later is when Warren announced he's stepping down. I'm like, "You see, you jinxed it. Thanks." So, yeah.
Well,
So
I think they're still going to have it next year. Now we'll go have dinner or something. We'll make it happen.
it's still going to be historic, because for the first time in 60 years, Warren is not going to be the CEO of Berkshire. So it will be in and of itself a momentous event. So I'm excited to go and experience that. So I have a question about maybe a little bit of advice. I don't know. I was going to say put yourself in Warren's shoes, which could be tough to do, but I like to let people know or give people a little bit of advice, something that they can use to help them. So I guess in your opinion, what do you think Warren Buffett might give a bit of advice or direction to somebody that's just starting out, maybe has $1,000 or less to invest? What do you think he might tell someone to do with that?
Yeah, I mean, I think he's historically said, what is it, chapters 8 and 20 of The Intelligent Investor. I mean, I think he basically say to set the right foundation for thinking about how to play the game. And would define that as understanding stocks as ownership in a business as opposed to something that's just trading on a computer screen. Margin of safety and thinking about business quality and competitive advantages and what all this means in the context of owning a business, right? And forget about the stock market to start with. Think about the convenience store on the corner where you live, or the local grocery store, or something like that, where you can appreciate, okay, what does this business do? How much money's coming in? The money that's going out, where's it going? Who are our competitors? How much does it cost to put this building, stand it up? Things like that basically anybody can grasp. I would start there. And then, in terms of the actual dollars, I think it'd probably be a good idea to have some diversification, not really in terms of the $1,000, more so in terms of diversification of getting kind of more experience and more understanding under your belt of different companies and industries in terms of, okay, what does it look like when an investment goes well? What does it look like when an investment goes poorly? How do I feel from a behavioral perspective as either of those things happen? And that's really an important part of, in my mind, the investment process is learning who you are and learning about what is your ability and willingness to bear risk. What are the kind of companies and industries that you're drawn to that you really understand? What are the ones that, if you own it, the stock goes down 20% and you get really nervous? And these things are really important to kind of have a sense for and to figure out. And there's really no better way to get that than to do it and kind of build up some of that scar tissue on your own. So I think that's kind of the mentality I think that he would, for especially kind of a more normal person, not someone crazy 0.1% or 0.001% like he is, might be a useful way to kind of approach the game for the first time.
I think I'll add on top of that. I think one of the great things that Charlie would say is they would learn to not try to be smart, but try not to do dumb things. And I think for me, one of the things I got burned on that they helped me with was stop chasing yields. Just try to start avoiding losses. It's like the inversion, just flip it on its head. Charlie's inversion principle. I mean, and there's just so many. Again, going back to your book, you can open it to any page and you will be a smarter person, if not a smarter investor, by the time you're done with that page. So it's just so.
Yeah, real quick, I was just going to say, this is something, I mean, to the point you just made on, I think a lot of people, and myself included, start the game from the perspective of, the way to do this is I'm going to be a dividend investor, or, value investing is the right way to play the game, or no, actually growth investing. So like people can fall into these different buckets that they, in a lot of cases, start to label as kind of like the right way to play, right? And again, I think to some extent I fell into this a little bit in terms of probably more of a value investor mindset and a little bit of a lack of willingness to take the time to truly understand things that were kind of different, right? Like a really prominent one for me is like a Netflix in call it the early to mid 2010s, right? I never gave it the proper due, and not even to say the stock was cheap or something, right? Just in terms of like really trying to understand what the business was and getting blinded by a headline multiple. And I say that for the sake of a big part of my evolution, I think, has been getting to a place where it's less of like, this is the right way to play versus the wrong way to play, and getting to a place of here's a trade-offs with this approach and here's a trade-offs with that approach. And each may have merit for different ways or different reasons. Again, particularly depending on how you want to play the game. Some people are long-term. Some people are kind of doing something more that's like trading. Some people are concentrated. Some people are more diversified. Some people are trying to maximize returns and can accept volatility. Some people have different things they're optimizing for. So again, it's this idea of trade-offs and not being too sure that you've found the only way to get to heaven, basically.
That's a Warren quote. There's more than one way to get to financial heaven, paraphrasing it. And yeah, man, I've actually been kind of coming out of that, because when I started the channel, I was like, it's all about dividends and passive income, which is good. But I've found when you're young and you have a lot of years of investing ahead of you, it's going to help to go with it. Dude, Larry Cunningham's book, I got it on the shelf here. That one really opened my eyes, where Warren gives that 10-year example of a business that retains all of their earnings and plows it right back into the business, and then one that pays out a dividend. And he shows how even if you took that amount as the same amount as a dividend out of the business from just avoiding the dividends, but you would have more money at the end of the 10-year example, because the company plowing all that money back into the business, assuming that they can get a high return on capital, you would have a lot more money in that position and still be taking that same amount off, right? Kind of like if you would, why take get a dollar of dividend from Berkshire if they can turn that into $1.10? Just sell off little
Right.
bits of Berkshire and you get more money. So
And this is the learning process, right? This is the evolution of dividends are great or dividends are terrible if someone believes that for some reason, and then getting to the place of dividends are neither of those things. They can be either of those things. What determines whether or not they're a sensible thing to do? And going down those roads and thinking about and learning those kind of things. And again, I think coming back to what you said, then applying that knowledge to something that is still a very straightforward way of thinking about business ownership and partnering with people. I mean, it's a crazy idea, right? To partner with people that you trust and that you think have well aligned incentives. I mean, I know it's a crazy idea, but people buy stocks all the time where they're like, yeah, these guys are crooks, but it's cheap. To me, that seems a little wild. But again, like keeping these things simple and straightforward as you then apply kind of a thoughtful framework for what it means to be an investor and a business owner. If you're doing that, I think you're well on your way to at least playing the game reasonably well.
and it's funny. I love how Charlie would say they missed stuff. They were sucking their thumbs. That was me with Netflix. We use Netflix all the time. Like, and when it went below 200 just a few years ago, I don't know why I didn't buy it. I guess I thought like, well, I don't know. I just sat there sucking my thumb, and now it's over $1,000 a share. Looking back, it just seems like such a no brainer.
Funny one for me, real quick. It's one that I did buy around that time, and I've had plenty of mistakes, by the way, too. So just because I've had one that's worked really well, but it was a meaningful position for me, and it's obviously been a really nice winner. I only say that for the sake of saying probably the main reason why I invested in the company is because I had owned Disney for years at that point, and I still own Disney today, by the way, which has not been a great investment. But owning it gave me knowledge about the space that I don't think I would have had otherwise, and it gave me an appreciation for the strength of Netflix's position. That again, I don't think I would have truly grasped that if I hadn't owned Disney and recognized how difficult it was, even for them, which they're, in terms of traditional media companies, they're the best position in terms of trying to fight and play this game long term. And even they've had a lot of struggles along the way. So, point being, I think a lot of this stuff is connected, and you can take the learnings from things and apply them in other places. And it's again also why I think it's one of the really nice things about being more of a long term investor, right? Where a lot of this stuff, the knowledge is cumulative and is useful in different ways in different places over time versus a jump in, buy XYZ thing and sell it on a 30% pop. And now you're off to something that's completely different. Like, I guess maybe you could come back, but it's hard to stay on top of stories when you're doing that in 50 different places versus like I'm following 5 or 6 different things basically at the end of the day. So I should be able to see every once in a while, I should see something that makes sense to do. Just think it's like a more straightforward and easier way to kind of play the game.
Yeah, and again, like Charlie would say, it's when you're buying and selling, you're unnecessarily interrupting the compounding process. So why would you do that? So that's something that's been helpful to me. What Warren or Charlie thought or idea has been maybe most or really helpful to you?
It's always hard to say what's specifically from like the research of the book versus just this almost 20-year like obsession of just learning from them over and over and over again and picking up different things along the way. I mean, the one that stands out the most to me in the last couple of years and that really shines through in the book is thinking about the importance of capital allocation and the incentive structures that Warren would implement at the wholly owned businesses in terms of very clearly telling the managers how he thought about the value of the cash flows and what he viewed as the hurdle for them to take that cash and to reinvest it in things that were not kind of like in the core of, basically call it like maintenance capex type thinking. Anything beyond that, the hurdle for that spend, he placed a very high price on because he had an idea of what he could do with the money elsewhere. And again, you look at most companies or a lot of companies, and the framework for thinking about these things it's so much less clear, and sometimes it's clear that it's not at all that way of thinking, right? I think about even some of the investments Warren's made, like PetroChina is a really notable example in the early 2000s, or even Apple, right? I think so much of that investment is some component of obviously thoughts about the business and where it might go over time, but that combination of valuation and a clear understanding of what their capital allocation priorities were, how important that is to him on some of these investment decisions. And again, having invested in a number of companies over time and followed other companies, I've developed a much clearer understanding of why he thinks about that as such a an important part of the investment decision.
As you're talking, there's just so many thoughts, and I mean, I'm going to be thinking about what Warren said just forever. And I love that you shared that, because that's going to help me. And we can lose focus, I think, of looking at the management team and how critical it is, because they're literally the ones that are handling our money and they're supposed to be growing it. So I guess you kind of, I don't know. Did Charlie say put all your eggs in one basket and watch that basket, or is that somebody else?
I mean, I think somebody else said it, but he certainly operated. His approach to allocating his portfolio over time has surely reflected that type of mindset in terms of very large positions periodically. Um, yeah, yeah.
Just after the book came out, Warren said he's done, exited. So your book is, I guess, missing one year. Do you have any updates planned, any revisions, anything like that?
Not currently, as we've already discussed. It was quite an exercise to get it to here. I gotta talk to the publisher again about how difficult it is, or how much of a challenge is it to kind of do like a update. I guess it might not be every year. It might be just this one year, right? To get that added. I don't know what the time frame is for something like that to happen, but I'd surely like to do that over time. Obviously, if it's kind of a value add, we'll see what the structures of the meetings looks like going forward. Maybe there's an opportunity for me to go through and listen to old CNBC interviews or different things over time and add some of that content. It's also, again, as we said, it's already 500 pages, so maybe this is the Buffett and Munger Bible as I see it. It's not going. There's not going to be a version 2 of the Bible. It's just going to stay how it is.
I know I shared this with you, but The Daily Stoic by Ryan Holiday is a book that I read often, and it's one daily stoic. It's a one stoicism thought a day. And I don't, if you're ever sitting around and you have nothing to do, there you go. You might be able to turn a daily Buffett and Munger, something like that, from your
Yeah,
book.
there's
Right. It's so much easier said than done, dude. It's so much easier said
there's
than done.
there's 365 or 366 quotes in here, so we can make maybe you can help me do this.
We'll put a pin in it. I don't know. So I guess we can wrap it up there. I literally could probably talk to you for hours and hours, but be respectful of your time, of the viewer, the listener's time. So where can they find your book? Where can they find? We already said TSOH. Yeah. Do you have any special links? The Glide Foundation, right? Portion you're going to donate. So just touch on that a little bit. I think this is really cool.
Sure. Yeah. For people who don't know, so Warren, I believe it started in the early 2000s, in 2002 or so, and went for about 20 years, I believe. I don't think he's doing it anymore. But he did the annual lunch auction where he would donate all the proceeds to Glide, which is a charity based out of San Francisco. So yeah, again, as I went through this process of writing the book, Warren and Charlie mean so much to me. I mean, I'm very lucky to have a fantastic family, so I didn't need kind of other father figures in my life, but they're very important to me in terms of obviously business and investing. But I look at a lot of things they've done otherwise, and they're just people I really look up to. And people are watching this on video, you can look over my shoulder and see I'm not a big fan of. I don't have many physical possessions, but on the wall over there is a small note from I wrote Warren a letter in I think it was October of 2010 as I was getting close to graduate from college. And as I remember, I wrote something along the lines of like, I'm not writing to ask for a job or anything. I'm just writing to let you know that, hey, you've been really important to my development in terms of what I want to do with my career and things like that. And I just kind of want to say thank you. And much to my surprise, I got that little note back, which, who knows how many times Warren's done that over the years, thousands, tens of thousands more. But it means a lot to people when you do something like that. And I think it obviously speaks to kind of who he is. And obviously he's been, as you know, right, he's been like an educator to a generation of investors. And he's obviously talked over time about things like politics and things that he thinks are important, right? As I worked on the project, I thought I should kind of implement a little bit more of that in my own life. And one way for me to be able to do that was to give back half of the net proceeds from the book. So I agreed to do that, to give half to Glide. So yeah, it's people who are buying the book. Not only are you getting a resource that's really helpful for you in terms of business and investing, but some of the proceeds are going to support a to support a good cause as well. So
That's so cool. When I first heard that, I thought, so the book can change your life, but then by you buying it, the proceeds can go to help change somebody else's life. It's just that ever expanding circle of goodness that Warren puts out into the universe. And I've never met him, but just so happy to help. Hopefully, contribute a little bit to that. Few people here are going to watch this, and again, so just buy the book. You will not be disappointed with it.
it really hit me towards the end of the project too, like when Charlie passed away, and just thinking about, I'd seen him in person a couple times at the Berkshire meetings, but also just watching the YouTube videos and stuff like that over the years, which obviously are still out there, but it's kind of different when the guy's, someone watching it 10 years from now, and they didn't really know who he was, or didn't have that kind of sense of a relationship with him the way that people who saw him when he was alive did. Um, it's just nice to know that his words will kind of live on in a way through this book. And again, my small contribution to helping with that is something that I'm just happy I'm able to do, or was able to do.
Poor Charlie's Almanac too. When you spit his words, just that's another good read. That's something I should probably be reading once a year instead of just referencing it here and there. Do you have anything else to say for us? Any last words, parting thoughts?
I don't think so. I appreciate you having me on. Maybe we'll come back again and do it sometime. We can stock some individual stocks or something. We can get past the book and get to the fun stuff.
Dude, that would be. Oh, I would love to help. We'll do it. We'll set that up.
Awesome.
Absolutely. I'd love to have you
We
back.
will
So,
do it.
everybody, thanks. Yeah, thanks so much for watching, and we'll catch you next time.